I think is forgotten is the history of silver and the fact that silver is money. And, we talk a lot about what's pushing silver prices today, which is mainly industrial demand. But as investors come back into the silver space for that inflationary hedge, for that one true wealth, I think what tells me that silver is undervalued is just simply the nominal price. If we were talking about inflation adjusted pricing, we'd have a price that was three times higher than the current price, almost four times higher. So silver is, I've said this recently to many friends. If I was only allowed to own one asset, I could only be in one thing, it would be silver. And the reason for that is it's the only asset class that I'm aware of that it hasn't moved yet. So let's say I think you're going to see $60, $75 silver fairly imminently. And at some point, yes, we will probably get a correction or maybe something even more painful. And in that, everything will pull back. But is there a chance that silver is higher during that crash than it is today? If it runs from here to 75 and then during a crash pulls back to 50, and if you're waiting for, and what are you using to purchase the metal today? You need to rotate out of another asset class. So I don't know. I'll just...
For decades, the illusion of prosperity has been carefully maintained by a system built on promises rather than possession. Central banks expanded balance sheets, governments borrowed beyond comprehension, and investors learned to equate printed digits with wealth. But every era of artificial abundance ends the same way, with a reckoning. In the 1970s, the dollar's divorce from gold unchained a tidal wave of money printing. Paper replaced substance, and markets mistook liquidity for stability. The result was predictable: asset inflation, monetary complacency, and a public lulled into believing the cycle could continue forever. Yet beneath the calm surface, the foundation of fiat was quietly eroding. Today, the cracks are visible to anyone willing to look. Nations once content to hold treasuries are accumulating physical gold and silver. Sovereign wealth funds are quietly diversifying into silver, a metal long dismissed as industrial, but historically recognized as money. Even Wall Street, the financial center of the world, is beginning to hedge against the very system it helped inflate. Shawn Khunkhum, one of the most respected voices in the precious metals space and CEO of Dolly Varden Silver, argues that due to the current economic climate, silver may be setting up for its greatest run in the metal's history. According to him, silver's resurgence is not a fluke of industrial demand or speculative hype. It is the consequence of disillusionment, a growing recognition that the global economy's pulse depends on the credibility of central planners. As that credibility fades, capital is seeking refuge in what cannot default, devalue, or disappear. The shift is no longer confined to boardrooms or bullion banks. Retail investors, sovereigns, and institutions alike are experiencing a quiet revelation that the money they hold is merely credit extended by a system on borrowed time. The flood of interest into silver miners and physical bullion is not just a trade, it's a change in belief. Each breakout above resistance levels, each new record for silver, reinforces a simple truth: value is returning to the metal. What comes next is not chaos, but recalibration. The monetary system will not collapse overnight. It will transition, quietly and irreversibly, from trust to tangibility. Silver, with its dual role as both metal and money, will stand at the center of that shift. When the illusion of fiat stability finally dissolves, those holding real assets will not just preserve wealth, they will define it. Gold will remain the anchor of value, but silver will become the currency of exchange in a world rebuilding from financial illusion. Shawn Khunkhum agrees, in his words, "If I was only allowed to own one asset, it would be silver. It's the only asset class that hasn't moved yet. Everything else has gone up exponentially: bell peppers, gasoline, housing, everything except silver." The great monetary realignment has already begun. The question is no longer if fiat will fail, but when the world will finally admit it. Let's get into the video. But before we do, please smash the subscribe button and turn on notifications so you do not miss out on our daily recaps.
Question, Jesse. No, it's a really exciting time, and people in the space who've been long suffering are starting to smile a lot more. If I looked at the factors that are driving silver today, I think I'd start off with gold's leadership. So I think in every bull market, gold leads, silver lags, and then it outperforms. And so I think I really contribute a lot of the success that we're having in the silver space right now to gold. If we go back to April, which really marks the breakout for silver, silver's up about 50%, whereas gold is up 25%. So we're starting to see that silver outshine the yellow metal. However, what gives me a lot of pause in terms of, are we getting into a place where we're moving into a euphoric high? What gives me pause on that is the silver to gold ratio. And so because we're still at an 85-1, I still think it is really, really early innings. But look, to summarize, look, I think all the reasons that whether it's the industrial demand, what you're starting to see now is some sovereigns are buying, right? Typically they were just focused on gold. Now the sovereigns are buying silver. But we're seeing participants, whether it's from the crypto world, that are coming into precious metals. And so generally speaking, it's more participants, but it's gold leadership, it's industrial demand, but it's still very, very early innings. Absolutely, Jesse. Look, what I think is forgotten is the history of silver and the fact that silver is money. And, we talk a lot about what's pushing silver prices today, which is mainly industrial demand. But as investors come back into the silver space for that inflationary hedge, for that one true wealth, I think what tells me that silver is undervalued is just simply the nominal price. If we were talking about inflation adjusted pricing, we'd have a price that was 3 times higher than the current price, almost 4 times higher. So silver is, I've said this recently to many friends. If I was only allowed to own one asset, I could only be in one thing, it would be silver. And the reason for that is it's the only asset class that I'm aware of that hasn't moved yet. Everything else has gone up exponentially. The price of the bell peppers that I'm buying at the grocery store, the gas I'm putting in my vehicle, the home I'm living in, everything's gone up except for silver. And so is silver cheap relative to gold? Yes, it's cheap relative to everything. So I think the evidence that the mining equities in large are very, very inexpensive is the fact that if we look at the GDX, the index that is home to many of the big miners, it is only now trading at the same price it was trading when gold was 1900. So here we are with twice the gold price, and the stocks are trading as if the gold price was 1900. So I think that's evidence of how much value is in these miners. I think that the interesting thing is, the industry, those who are participants in the industry are selling stocks today because their shares are up 100%. But what they're failing to recognize is there is no generalist money here yet, right? That tide of capital is yet to come. And I can say that because I talk to generalist money all the time. And, the generalists, like those who, are very, very, diversified, might have a 1% weighting to the precious metals complex. And that's a very, very rare, those who are out there who understand sound money, who understand, having an insurance policy within their portfolio, they may be at 1%. But I think the reason this new era is so interesting is, there was a report out for Morgan Stanley recently where, we're all familiar with the 60-40 portfolio. And what was suggested in this document was a 60-20-20, a 20% weighting to precious metals. Now, I'm only 44 years old. I've only been at this for 22 years, but I'm surrounded by people that have been doing this for longer than I've been alive. And what they're telling me is never in the history of modern financial markets has a Main Street institution come out and suggested a 20% weighting. Like, this is a historic time. And what gives me a lot of confidence that it hasn't even begun is I'm constantly touring investors up to my property. And these investors, are looking to go from 1% to 3% weighting. And so, and they're not doing it. They're just thinking about it. And so, the world has been so consumed with the everything bubble. And because silver has not participated as of yet, so much of our world is passive money, which is driven by algorithms and technical data and plays on momentum. Well, we haven't had momentum in this space, and now that it's starting, it's just beginning. We're starting to see some capital allocated here, but I think it's very, very, very early days. And again, if you just look at the ratios, whether it's the Dow to gold ratio, the silver to gold ratio, these ratios are telling us historically this market is in its infancy. It's in its second or third inning.
Silver is currently trading around $49 at market close. That's a 50% increase since April. Meanwhile, gold is up a respectable 25% in the same period. For the first time in years, silver is not just following gold, it's leading the charge. But here's what should shock you. Despite this massive rally, Shawn believes we're still in the early innings of this bull market. His reasoning? The silver to gold ratio still sits at 85-1. Now put this in perspective. The entire physical silver market recently surpassed the market cap of Amazon, a single company. Silver's market cap, approximately $2.5 trillion. Gold's market cap, $25 trillion. That's 10 times larger. Khunkhum told us something that should make every investor take notice. If I was only allowed to own one asset, it would be silver. It's the only asset class that hasn't moved yet. Everything else has gone up exponentially bell peppers, gasoline, housing everything except silver. Morgan Stanley recently suggested a 60-20-20 portfolio. That's 60% stocks, 20% bonds, and 20% precious metals. Khunkhum, who's been in this business for 22 years and is surrounded by people who have done it for 50 years, says this. Never in the history of modern financial markets has a mainstream institution come out and suggested a 20% weighting. Let me repeat that, never in history. Yet most investors today have zero exposure to precious metals. The sophisticated ones might have 1%. Here's the reality check. At current prices, silver would need to triple to reach its inflation-adjusted all-time high. We're talking about $150 an ounce based on historical purchasing power. That means the current price around $49 could make silver one of the most undervalued assets in today's market. Now we'll show you more clips of the latest interview, but first smash the subscribe button and turn on notifications so you do not miss out on our daily recaps.
I think the short answer is when we really get price discovery, it'll be after a event where investors rotate away from all of those assets that were just described there, bonds, crypto, traditional equities. We've reached some unprecedented valuations in so many asset classes. And what I would just say because I've got friends that have been investing in the space for many, many, many decades, and some of them are sitting on huge amounts of cash waiting for the crash and saying, I'm gonna really step into this gold and silver market after the crash. Now, I've opted to have a different strategy, and the reason for that is if you go back to the last great crash that we've experienced globally, it was the GFC in 2008. Okay, if you waited to buy let's just focus on gold. If you waited to buy gold during the crash, you had to pay $680 an ounce. You could have bought it pre-crash for half the price. So prior to the crash, it got up to 1,000. So exactly like you said, it was hurt. Now, on a relative basis, it was a lot less hurt than other things. I think in that environment, I think the Dow went from, I don't know, 18,000 points down to 6,000 points. So, your $100 Dow investment was worth $30, where, your gold investment still retained 67% of its purchasing power. So it outperformed traditional assets 2 times. But my simple point is get allocated now, right? Because so let's say, I think you're going to see $60, $75 silver fairly imminently. And at some point, yes, we will probably get a correction or maybe something even more painful. And in that, everything will pull back. But is there a chance that silver is higher during that crash than it is today? If it runs from here to 75 and then during a crash pulls back to 50, and if you're waiting for, and what are you using to purchase the metal today? You need to rotate out of another asset class. So I don't know. I'll just tell you just a quick story. So in 2020, we had run in silver from sub $12 to $30 from March to August. From $12 to $30 in a matter of months. I knew that was an overheated move. I knew we were going to correct, but I didn't get out of the trade. Out of the fear, I couldn't get back in. And here we are today, 50% higher than that spike high to 30. So you're not going to be able to trade this market. You just need to buy it. You need to sit tight and be right. And whether you pay, $4 an ounce in 1990, or $40 an ounce in 2025, silver is actually cheaper today at $44 than it was at $4 if we factor in all the other inputs and if we factor in what's coming.
We're watching a historic revaluation unfold in real time. Silver has outpaced gold by 2-to-1 this year. The mining stocks have doubled while still trading at 2008 valuations, despite metal prices being dramatically higher. While all this is happening in the background, a major Wall Street firm just recommended a 20% allocation to precious metals for the first time in modern financial history. And yet, generalist money hasn't arrived. Retail investors are still chasing tech stocks. Financial advisors are still building 60 to 40 portfolios with zero commodity exposure. Billionaire David Bateman, who's been buying massive amounts of physical gold and silver, said it best. When the equity markets turn and investors find no refuge in collapsing bonds, commercial real estate, or Bitcoin, gold and silver will eat the world. Whether that happens through a market crash or a continued rotation, the direction is clear. The only question is whether you'll be positioned before the crowd arrives or after CNBC finally starts talking about it. The smart money is moving. The question is, will you move with it or wait until it's too late? Post in the comment section down below your honest opinion, share this video with someone who needs to hear this silver warning, subscribe and click the notification button to get more updates. Thank you.